Welcome to Overnight Market Brief, pre-market edition by AGI Era. Good morning. Today is Wednesday, January 21st, 2026, and it is shortly after 8 a.m. Eastern Time. This is your executive summary of global market developments, analyzing the overnight flows in Asia and Europe, the key macro drivers, and the setup for the North American Open. The prior session and macro context. First, a look back at yesterday's close. Wall Street finished on a defensive footing, driven by a broad risk-off sentiment. The S&P 500 settled at 67.97, down 2.06%, while the Nasdaq 100 declined 2.12% to close at 24,988. This sharp equity downturn was correlated with a significant flight to safety, as evidenced by a notable surge in gold prices. Right now, the 10-year Treasury yield is trading at 4.279%, down to 0.41. The U.S. dollar index is down at 98.25, while crude oil is up around 60.49. Gold, a traditional safe haven asset, is notably higher, trading at 4,865, up 2.10%, reflecting underlying market anxiety. The slight dip in yields is not enough to offset the broader risk aversion indicated by gold's strength. Overnight session, Asia and Europe. Moving to the overnight session, global markets have been mixed, with regional narratives diverging. In Asia, the picture was mixed. In Tokyo, the Nikkei 225 finished down 0.41%, tracking broader regional caution. Meanwhile, in Greater China, the Hang Seng rose 0.36%, while the Shanghai Composite gained 0.08%. The divergence here suggests a degree of resilience in Chinese equities, potentially on hopes of future stimulus, contrasting with the Nikkei's slight decline. In Europe, major indices are trading with a cautious tone. The price action suggests investors are digesting recent economic data, providing a subdued lead-in for U.S. traders. Notably, UK inflation data released earlier showed a rise, impacting European monetary policy expectations. U.S. futures and the open. Turning to the U.S. pre-market, equity futures are trading slightly lower. S&P 500 futures are trading down 0.12%, while Nasdaq 100 futures are down 0.28%. The relative underperformance of Nasdaq 100 futures suggests continued pressure on growth-oriented technology stocks, despite the slight dip in the 10-year Treasury yield. This indicates that broader market sentiment and specific sector concerns are currently outweighing the minor rate relief. The daily catalyst. Looking ahead to the session, investors are focused on three key catalysts. First, the UK's December CPI data, which showed inflation climbing to 3.4% annually, is sharpening the debate over the Bank of England's next rate cut. Second, the German economic outlook, with reports indicating a cut to the 2026 GDP growth forecast to 1.0%, highlights ongoing fragility in Europe's largest economy. And finally, the persistent geopolitical tensions continue to influence global capital flows and the dollar's role as a safe haven, as discussed by major financial institutions. Given the overnight setup, particularly the strength in gold and the cautious tone in equity futures, the market's path of least resistance appears to be range-bound with a defensive bias, pending any further developments from these key catalysts. That concludes your overnight market brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.